Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look in the gold market. So for the gold market, it's becoming the common thing when the fundamental background is more interesting than the technical one. In general, gold market is flowing with the same fairway as other markets because the driving factors mostly stands the common and the same for all markets. In the forex market, commodities, financial markets, and stocks, bonds, and because actually three major components exist currently: and stimulus, vaccination, and the situation with the virus in general. So that is what is driving the markets across the board. With the fundamental analysis of the situation, medium-term situation that we have, with the 2 days that we have did, yesterday Forex report, because actually we have taken a look at the same driving factors today in the gold market. We keep our positive view on the gold in the perspective of the approximately for 6 months, with a few reasons. First of all, Fed has confirmed recently the tough situation in the economy, and that inflation and interest rates should remain depressed for a considerable period of time. We suggest this will be more than the 6 months, although Fed is positive for in the second half of the 2021. Well, it seems that it will be a bit longer, depressed situation than just for half of a year. Because of the few things, we think that the vaccination performance will be worse than expected, since we already see some problems with the vaccinations. You know that the Health Department in the United States reclassified as a Moderna vaccine as the Pfizer vaccine only for emergency use, not common use, but for emergency use only. It's because of the side effects that was discovered recently when the vaccination had started. Second, as we said yesterday, is that we see the problems for global industrial production of the vaccines because they need to have the mix where the active components of the vaccine should be added. It's creating the mix is actually the vaccine. But mix is produced in China and in India, where this production is limited, and the export of this mix decreased compared to what was before the pandemic. And that also will make impact on the industrial production of the vaccine. So all this stuff stands supportive to the gold market. Finally, for the fans of the conspiracy theory, or for the people who are interested with that, if you remember, a long time, I'm also keep an eye on the Donald Trump efforts to contest the result of the elections, and I still make the half notice of that briefly watching for news on this topic. And recently it was information in a Twitter that Mike Pompeo and Stephen Mnuchin have acknowledged that they have no disagreements between each other, and it's raising the questions why actually they just have noted that, for what purpose. But if you'll take a look in the law that Donald Trump has signed in 2018, that has a relation to setting of the martial law on the territory of the United States in the case of the hazard to national security, or intruding external intruding to the elections, the President of the United States could set the martial law or emergency regime only if Treasury Secretary and the Council of the United States have no disagreements. So this story is continuing, and this story is simmering. That's why we will keep an eye on this stuff as well. But actually, why I'm talking about that if indeed something is happening on the background of that, it's also supportive to the gold. Now let's take a look at the shorter term situation. Currently, guys, we see good upward performance, but technical picture stands almost similar to the forex market, to the euro currency in particular. The problem on the gold market currently is the twofold. First of all, market is very narrow, so we see the trial of liquidity as investors come to the holidays and reduce the activity. Second, market stands too sensitive to the short-term driving factor, and the short-term driving factor is only the single one, is a stimulus. Other driving factors are also positive to the gold, but they probably will have impact in the medium-term perspective, keeping depressed the major economy statistics from the United States. But in the shorter term, the only stimulus factor is a cornerstone for market performance. And currently, everything depends on the Congress. As you know, today, late in the session, in holiday, the Congress will vote on providing 900 billion stimulus to the people before the Christmas. If this pack will be approved and accepted, we should be prepared for a gap up opening on Monday on the gold market and action directly to the 1930, where the OP target stands of this ABCD pattern. So better to see on the follow time from chart. It's OP. Approving by the Congress the stimulus pack, we will get the gap up opening and rally to the OP or maybe even higher. That's what's important. Because currently the market stands at the resistance. We said this last week. And to break this resistance, market needs either some strong driving factor, which could come from the Congress, the stimulus from the Congress, or we're moving with the normal way, it's just watching for a pullback, watching how market responds to the support areas, and then hoping that the gold will have enough positivity to make another effort to break this area. There's two moments that we have. Correspondingly, if you intend to take the long position, you could consider two ways to do this. They are not mutually exclusive. First is using stop buy order somewhere around 1898, 1819 even, above the COP, in a case if market will open with a gap up, and you will be involved in the trade if market will break the level with the gap on the daily chart. Alternatively, you could wait for some pullback, maybe a bit later in the session. This market will try to close the gap, but I don't know how the situation will develop and what the strength of the market will be. Do not forget that we're staying on the thin market this week. Second way, if no stimulus from the Congress will be this weekend, we are watching for a pullback. It's considering two levels that we already discussed, 1866, 1850. Actually, on the hourly chart, we have the same ABCD pattern that we already discussed, and we'll be watching for OP and for the XOP targets, how market will respond to this area, trying to catch the bullish pattern. But in general, guys, if you'll take a look at the price section that we have here, it stands not in a favor of the downward continuation, because this is too choppy price section. That's, the ABCD shape usually takes the different price behavior. Mostly, it reminds me some consolidation around the top. Yes, we should not forget that on Friday it was high expectation from the Congress to provide the stimulus. Here we have a kind of the peanut. And my suggestion is, this type of action is more friendly to immediate upward continuation, immediate breakout. At least on a Friday, it was different fundamental background, more anticipation of the stimulus from the Congress, as I said, and from that standpoint, market stands more in favor of immediate continuation rather than deep retracement. That's what we have currently on daily chart. So it really might be very highly likely that we will get some gap up opening if the Congress will provide the stimulus and rally right to the OP target first 1930. Right here, but potentially it could be even higher price action. So if you would like to go long, consider these two ways to act, using the stop buy or waiting for retracement, what you like more. If you have the bearish view and would like to sell, currently we do not see good background for taking the short position, because actually we don't have, guys, any bearish patterns. Your task in this case will be just to wait for clear bearish patterns especially if Congress will not adopt the stimulus pack. So that's what we intend to keep an eye on the gold market in the next week.